Good evening, everyone. Welcome to Banao Bharat's Trading for Living Wednesday live session. 20th of September, markets have closed and time is quite late now, 11:15 in the night. After about 6 days of staying above the psychological level of 20,000, and also Bank Nifty around or above 46,000. Today for the first time we saw a gap down opening, and large part of the day indices have remained in the negative territory. In the evening we have also got the data point wherein FIS have been net sellers to the extent of 3,000 crores. That was kind of anticipated given the global cues which were not so very encouraging in the last few days, and also yesterday being a holiday, Indian markets did not participate along with the global markets, so it had to cover up for 2 days of movements, which it did right in the morning itself with a big gap down. This gap down is significant because it has come after a good breakout and also after a good consolidation around the top. All has happened quite quickly since September 1st. Today we are in September 20th. Big up move for 7 to 8 sessions and then good consolidation, and then today there is a definitive reversal trend that is visible in intraday charts. But point to notice, on the hourly charts there is some hope still left for the bulls, and today both Nifty as well as Bank Nifty both have exactly taken the support at the pullback levels, and they have slightly closed above the pullback levels. So in today's overall market movement, two takeaways. One, on the intraday chart there is a definitive downtrend that has got established with today's price action, and two, small hope is left now for the index players at the pullback levels, where looks like both Nifty and Bank Nifty have taken some intermediate or the immediate support, and both have shown not any big pullback from the pullback levels yet, but looks like they might just survive for one more day, that is tomorrow being the Nifty expiry. Global cues are eagerly watched, especially Fed policy, whose outcome will be expected today any time now, which will have a immediate bearing in tomorrow's morning's opening session itself, followed by Bank of England's policy, and then comes Bank of Japan monetary updates on Friday. So this is going to be a action packed week with a holiday in between. Monday was a good day. It was kind of a sideways movement, but it had made a lower low compared to last week's close. Lower high compared to last week's close. Tuesday was a holiday, Wednesday, definitive shift in trend on the intraday time frame and one minor hope at the pullback levels on the hourly charts. Tomorrow, Nifty expiry, and on Friday we have Bank Nifty Sensex expiry. Apart from these two back-to-back expiries, we too have some heavy updates coming from international quarters. So it is in a way easy to stay away from the news driven days, but then every day there is going to be something or the other, so you cannot ignore the markets and stay as a spectator forever. So my take, whenever you are witnessing big action day in terms of events or news, not in terms of price action, whether a day is going to be a big price action day or not, only time will tell. We will not be able to assess it beforehand, but we can at least say if any big results are coming, if any big policy statements are coming from the governments, or if any political developments, these things we can assess whether these events are big or the regular events that keep happening every now and then. Even though bank policies have become a standard, regular and predefined events, in spite of it being a predefined event, still the impact of US government rates have global repercussions, and we need to take cognizance of the fact that US Fed rate decisions does have an impact, at least short term or at least immediate impact on the global stock markets. So that being the case, how do we trade? As a retail trader, you can't change, you can't shift, you can't move these events. All that we can do is either stay out or play at least partially and be in the game. That gives us confidence to trade the events, that gives us confidence to be in position at all times and manage our positions while we are in it. It tests our psychological setups, it tests our risk management methods, it also tests our strategies. So whenever such events are there, instead of hiding ourselves, it is better we throw ourselves in front of these events, but not fully exposing ourselves, at least with some kind of lifeguards. Trade 50% or trade lesser than 50%, maybe 25% also. The point is only exposing ourselves to the risks will what gives us some returns. If we shy away from risks, then we have to live without returns also. This is the chart of Bank Nifty today. You can see here opens at around 45,839, and very quickly the very first candle's break happens to be the reversal sell. So it goes up to 45,440 from the entry level of 45,652, which is about 200 points, before climbing back little bit towards the end and closing at 45,585. These are intraday charts. Again on the Nifty also the same story, gaps down. 20,050 is the high on the spot, and the first candle low 19,968 and break of that has been firmly put Nifty's intraday trend into the downside, goes down all the way up to 19,878 before closing around the lows at around 19,910. Some amount of holding can be done based on the hourly charts. This is the hourly charts of Nifty. 20,001 was the pullback level. 20,001. It has broken that level and made a new low at 19,931 before closing at 19,972. Not much higher compared to the lows that it has created and also has not closed above the breakout level of 20,001. It would have been good if it had closed above 20,001. It would have given us little more hope that maybe pullback will definitely happen on the settlement day tomorrow. But still it has not taken the stop loss yet, which is an indication there is still some hope for Nifty players on the higher time frame, and tomorrow being an expiry, there might be one pullback, and if there is such a pullback towards 20,100 levels, then you should be exiting the Nifty and wait out for the settlement and take a fresh view on Friday. So that is with respect to the Nifty chart on the hourly time frame or the swing time frame, wherein Nifty has touched the pullback level and it might go higher from here on. The same with Bank Nifty. Had a pullback level at 45,460. It has exactly cut 45,460, made a new low at 45,440 before closing at 45,585, which means from the lows of 440 to 585, around 145 points higher. Some hope in this Bank Nifty also. Today it has already expired and tomorrow it plays with a new settlement. Still there is some hope that there might be at least 1 day's pullback on the hourly time frame. That gives us hope that tomorrow may be a positive day. There is more probability of tomorrow being a positive day than one more negative day. But then market is market. We should be prepared at all times with any eventualities. If you are already in the position, all that you have to look out for is where is your stop loss level. If you are clear about your stop loss level, you don't have to worry much. This is a kind of a high probability trade at the pullback level. So be hopeful. There is more chances of market bouncing back than one more round of fall tomorrow. Let us see how tomorrow pans out. Let us try to catch up tomorrow, maybe during the live session itself. While the markets are still running, I will try to catch up tomorrow in the morning session itself. Have a good night's sleep. Let us meet once again tomorrow. Until then, Om Swasti.